In this video, we are going to be analysing AHI. We're up about 250% as we're recording this, around $2.50. Now, quickly from that intraday perspective, we are very bullish. Not only have we come back to test our support, but we are also holding above that 2-day anchored VWAP. As long as we're above that 2-day anchored VWAP and the intraday VWAP, we are very bullish on the day, really only looking at that long bias. Now though, to get into the key levels, what am I paying attention to? So what you can see here, we have 4 lines. These are our statistical deviations. The blue ones are the second deviations. The green ones are the third, and the dashed line means a 6-month, and the whole line, the solid line, means the 1 year. And that one's actually meant to be the 1 year, so we will quickly update that now. So what this basically means is, if you've watched this channel before or you really understand standard deviations, you can see this is the range of the third deviations. This is really going to always be the key thing we're looking at, because whenever a stock breaks or goes to that third deviation, it is very unlikely that it kind of stays above that level. And the reason for that is, again, if you understand standard deviations, what is the third deviation? It's 99.7% of data trades within it. So what this really means is, we're only expecting to see 0.03% of the data outside of that level. So considering that from a statistical standpoint, it doesn't make sense for a stock to trade outside of that range all that long. And that's why I tend to turn very short bias as soon as we break above it. We can see this stock is, basically very dead, and then all of a sudden spikes up through that level. And again, even that move was quite short-lived. We then snapped straight back down to kind of fair value. If we were trading that, obviously that trade is complete. We would have been fully out. Now it's retesting this level. Now, what's most likely this move is most likely going to be a dead cat bounce. Again, we'll see if we can end up breaking that high. If we do, then it's just a second stronger momentum push. But as of right now, potentially just looking at a dead cat bounce. But this dead cat bounce has still taken us above our third deviation. So again, still extremely overbought. If we can trade it short bias, that's always going to be my plan. I'm never looking at a stock long bias above this area, because 910 it's just gonna fall down. So to me, it makes no sense being long bias above that level. So that's really that main focus I can see on AHI is really as long as we're above 165 short bias. I don't really have any targets to the upside. You can just pay attention to really previous levels. You could look at the 350 and the 388 as kind of previous levels as potential targets. But to me, again, not something I would even be trading long bias out of here. So to me, short bias only, looking to trade it back down to a minimum of 165, but I think really in time we could play it back down easily to that $1 level that we previously hit, and potentially even go lower. Thank you for watching. If you enjoyed the video, you will probably enjoy this video too.